How to use your RRSPs to buy an income property. Mark and Michelle own a primary residence. Mark is self-employed and Michelle works full-time. Mark and Michelle would like to invest in real estate and use $60,000 from their Registered Retirement Savings Plan, RRSPs, as a down payment for an income property. Years ago, they used some of the funds in their RRSPs to purchase their first home. They are unsure if they can use some of the remaining funds, currently invested in the stock market, to buy their next income property. They are also unsure about how to go about it. RRSP Property Plus is a proprietary solution offered by Streetwise Mortgages that enables clients to use registered funds from individual or combined spousal accounts, such as RRSPs, TFSAs, RRIFs, RESPs, to purchase an income property, without liquidating the accounts. In other words, without triggering taxes. Through the RRSP Property Plus program, Mark and Michelle will go through a 5-step process in order to use the funds. Step 1. Contact Streetwise Mortgages to discuss if Mark and Michelle qualify to use the registered funds. Step 2. Upon approval for the program, the team at Streetwise Mortgages will help Mark and Michelle open a self-directed account with a trust company, approved by the Canada Revenue Agency, and will help transfer $60,000 from the RRSP's funds from their current financial institution to the trust company. Step 3. Mark and Michelle are now ready to borrow funds from their RRSPs. The team at Streetwise Mortgages will help set up the loan in the form of an RRSP mortgage, including all details relating to the interest rate on the loan, the terms, and the monthly payment. Step 4. Mark and Michelle need to retain a lawyer to close the transaction and to register the RRSP mortgage. All costs associated with closing, such as legal, broker, and insurance fees, are rolled into the loan so Mark and Michelle do not pay in cash. Once the RRSP mortgage is registered, Mark and Michelle will receive $60,000 in cash minus any fees associated with the transaction that they can now use towards the down payment of an income property of their choice. Step 5. Every month, Mark and Michelle will use some of the cash flow generated by the income property they purchased to pay back the principal and interest on the RRSP mortgage. They can also deduct some or all of that monthly payment as an expense on the income property tax returns. Get your RRSPs working for you in real estate. Contact us to discuss how you can use the RRSP Property Plus program to achieve your investment goals.